Seeing they see a PDF, but okay. Can everybody hear me now? Alrighty. Can you guys hear me? Please let me know. I want to confirm. Somebody put in the chat there if you can hear me because I got some messages there that I was not being heard. So I want to make sure that we're coming across here. Okay, condo appraisal fundamentals. Thank you, Adriana. Sorry, people, about the technical difficulties this morning. So let's get into it. A condo, a real estate project where unit owners hold title to an individual unit in a multi unit property. They own the space inside the unit and they own an undivided interest in common areas within the project. Please note, if it's a Fannie Mae loan, it's completed on Form 1073. And if it's a Freddie Mac loan, it's completed on Form 465. Now, what are the key points to consider, which we're going to break down a little bit more? And the next slide is, well, the financial health of the association. That's really important because that's what's going to determine, are you going to go with a regular full review condo loan, or are you looking to do a limited review, or are you looking to do a non-warrantable condo? Excessive investor concentration, that's owners, too many investors owning units, too many rental units. Excessive commercial space, daily, weekly, or monthly rentals, right? Especially if there's a check-in desk to check people in, that's definitely going to be an issue. If it's a timeshare building, a continuing care facility, if there's litigation, right? This is a real important one. Now, please note that litigation, if there is litigation and you get additional documentation explaining the litigation and the contingent liability of the litigation, if the association has enough reserves to cover the contingent liability, it may well be possible to get the building approved. But those are a lot of ifs. You get those additional documentation and if the building has reserves. Deferred maintenance is another big issue to consider nowadays, especially after we had the condo collapse in Surfside in South Florida, which brought to light the issues with deferred maintenance, with the owners just kicking the can regarding uh, deferred maintenance on the unit. Normally that happens because they didn't want the association fees to increase. Now, project status refers to, is the project complete? Is it not complete? And has the HOA control been handed over to the association? This is typically more for a new development, but obviously these are items which will be commented on in the appraisal. So the important sections that you're going to review in order to review these key points would be the subject section of the appraisal, the neighborhood section, the project site section, project information section, and the sales comparisons section. So within the subject section, make sure that the address is correct. Make sure that the owner and seller information are correct. Make sure you have the correct occupancy. Is it occupied by the seller? Is it occupied by a tenant? If it's a refi, is it occupied by the owner? Is it occupied by the tenant? What is the HOA fee, the monthly fee? In the neighborhood section, real important to note, is the current unit housing trend declining? Right? It may say stable, or it may say uh, it's increasing, but if it says declining, then we have issues that are going to have to possibly be explained, and it could result in disqualification of the loan or LTV reductions depending on the loan type. In the project site section, a couple of interesting points to note is the zoning and the external factors or adverse site details, right? Is there anything going on in the community, in the vicinity of the subject? Are there any external factors that are a big disadvantage, right? Like, for example, is it is there a railroad track right in front of the place, or whatever may be deemed as unfavorable for a project site. Now, project information in the project information section, that includes the total number of units as well as the total number of rented units, units occupied by owners. Important stuff, because you may not have received your condo questionnaire yet. So this is some of the areas where you are going to be able to review the project information to see again if you're going to have to go with a limited review or a full review or a non-warrantable condo. Project status, is it established or new? Parking, right? How many spaces are included with the unit? Is the project complete or incomplete? What is the ownership breakdown percentage? Are the common elements complete? And what is the quality and condition of the project? That's where they're going to talk about deferred maintenance on the project as a whole. They may even mention things like if the 40-year certification has been completed or not on units that may be approaching or already at 40 years. Project analysis is where we get into the financial stuff, right? So when was the budget, or was the budget provided, and was it analyzed by the appraiser? They're going to note on the appraisal if they reviewed a budget or not. Sometimes they review it only if you provide them with it. Other times they may be able to obtain it easily from the association. That's not always the case. So if you do want them to review the budget, it would probably be best if you provide them with a copy of the budget if you have it, when you are submitting your request for the appraisal. The project analysis section is always also going to state if there's anything unusual or special about the project. And in the unit description section, they're going to talk about condition of the property, and again, the parking situation and how many units, if any, are provided for the subject. So another section is the review the comparables section, but I decided to give this one a whole page because it is so important, right? You're going to be in the grid. It's going to look like this, where you got the subject property, comparable sales 1, 2, and 3. Now, please note, it is probable that you will have more than 3 comparable sales, or at least more than 3 comps, period. There could be active listings, there could be pending sales also included, as well as closed sales, depending on how many comps were provided and depending what's the trend in the market. It's very important that you review the comps to ensure that the appraiser has represent the subject property. You want to review bedroom count, bathroom count, parking count, features, condition, which is going to be C1 through C6. Are they similar in age, style, and gross living area? Are they in close proximity to the subject? What's the date of the sale? And what are the gross and net adjustments? Are there any that are missed or overstated? I have one right now on a reconsideration of value that we're sending in, where the appraiser put the properties all in C-3 condition, but then made an adjustment on 2 of the comps over property condition, which didn't necessarily make sense if they're all in C3 condition. So the appraiser has to either correct it or provide additional explanation as to why they made that adjustment. I think it was 8,000 and 12,000, which could affect our average by $2,000-3,000 at least. And then if there is is you do uncover some type of what you may think is an error or an oversight, then you have to request a reconsideration of value from the AMC, as that is the only way that you can ask them to either correct mistakes or review additional comps that you may be looking to provide. So do reach out to listing agents, buyers agents, or whoever else can provide comparable sales to provide for the reconsideration of value. And last but not least, it is very important then that as we review this, we identify issues. Please review the appraisal to see if the property was marked as subject to repairs on the appraisal review instead of as is. As is means the property's good. Subject to repairs means there are issues that need to be resolved. In this one that we're submitting the reconsideration of value, we also had issues with peeling paint. Since it is a VA appraisal, they're very strict about peeling paint. So all areas of peeling paint would have to be scraped and painted, and the appraiser even put 2 coats of paint. We also want to note if the current use is the highest and best use for the property. There is one of the sections there where if it is highest and best use, it'll state it, and if it's not, it'll state it. And if it's not highest and best use, you have an issue, because then they may not do the loan if the highest and best use is not the current use of the subject property. Is it possible non-arm's length wear? Because if it is, then you have LTV reductions. Do the photos reveal any physical depreciation or functional obsolescence? Right. So just because the appraiser doesn't mark it subject to, marks it as is, that doesn't mean that the underwriter can't review the photos and say, hey, you got rotted wood over here, you got this happening over here, you got that happening over there, and ask for clarifications, and then the underwriter make it subject to. Does the appraisal summary detail property condition issues? Please be aware. They may not necessarily, they may, typically, if you're going to have property condition issues, it's going to be subject to. However, there are times when they don't put it subject to, but they do put some property condition notes. And that's more like an alert to the underwriter in case the underwriter wants to flag it for repairs. I already mentioned earlier that a declining market may result in disqualification of the loan or an LTV reduction at least. Is there non-conforming property use? That would make it illegal. That would be a non-compliant property. So do note and keep an eye on those checkboxes. Are there economic or environmental factors in the vicinity of the subject property that could affect the marketing, right? Like, did all the factories in the area just close and now you have 70% unemployment in the area, which is obviously going to affect market conditions for demand for the rent and may result in a higher vacancy factor for the property. Is the seller the owner of record? Because if they're not the owner of record, it could be that it's some type of a flip or something, or maybe they just bought it recently and public records haven't updated. So additional documentation may be required, and LTV adjustments may occur if it is a flip and there's not enough seasoning by the current seller for the capital appreciation that's happening on the deal, for example. Is the property actively or recently listed for sale? If it is a refi, cash out refi, that's a very big issue if it's listed for sale. Is the sales price outside of the neighborhood price range? Right, there's going to be a range in that area. If the range in that area is $200,000 to $300,000, for example, and the subject property is $700,000, then that's probably an over-improved property. And that is one that underwriting is going to look at it with a huge magnifying glass to see if they're going to do the loan, or there may be some type of LTV adjustments or something, because They don't want to be property in the neighborhood. And last but not least, do the bedroom and bath count not match public records? If they do not, that may indicate unpermitted or illegal modifications of the subject property. Something that we want to identify up front in the process, because when it gets to underwriting and they start asking about it, you're not going to have that much time to document the issues. So these are all the important issues for a condominium appraisal when we are looking at appraisals for condos. So waiting to see if we have any questions, any specific questions regarding condos. Don't see any questions here regarding condo. Give it another minute. Just remember the condo forms are different. It's not the 1007. It's the 1073 for Fannie Mae and the 465 for Freddie Mac, because the regular one that we order is a 1004 for single family homes. The 1007, which is the market rent schedule, does remain 1007. All right. Well, I don't see any questions here. So I will let you guys go for today. I will see you tomorrow for tomorrow's training at 12 noon Eastern Standard Time. Thank you all and have a great day.